What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Tonight, I wanted to talk to you, continue to talk to you about the idea that patience pays, right? The fact that we want to take only the best trades and leave the rest, right? Leave the rest for the rocket scientists, leave the rest uh, for the geniuses out there, right? I'm not really interested in like becoming a prophet of the market or something like this and being able to uh, predict every movement of the market or something like that. I'm interested in taking a mere handful of trades every month, okay, and making sure that these trades are the trades that seem obvious and easy to me, the ones that I don't have to stress out about, okay? The ones that get me in and out of the market quick with a lot of money. That's what I'm looking for, all right? And the rest of my time, what am I going to do with it? I don't know, you tell me. I'm going to live my life. Okay? I'm going to do whatever I want to do or whatever I should do when I'm not at my screens, all right? At first, when you get into trading, if you're anything like me, it becomes addictive, okay? I have a very obsessive personality. I've got a bit of a handle on it at this point, but when I first started trading, I can remember at one point I stayed up for like 3 or 4 nights in a row just staring at charts. I stared at 1 minute charts until I started to hallucinate. Okay, and I know that's funny, but I'm not joking. Okay, I get really into things, and trading is one of these things. It's very easy to get very into it, and you feel like you always have to be trading. Okay, what I suggest is you have a demo account that is just for your impulsive trading, all right? But you need to have an account that you take seriously. You need to treat this like a business, all right? If you were running a business and you put everything that you worked so hard your entire life into this business, you don't want to take any needless risks, okay? You only want to take the business deals or whatever that are for sure going to benefit you. You're trying to make, of course, you know, you got to leave some room for the unexpected. Sometimes shit happens, right? Bad things happen to good people all the time. You never know, right? All of these types of things. But as far as we can help it, we wanted to only take the best of whatever it is. We don't go to the store, and see three similar items, you know, they're all exactly the same. Each one is $10 more expensive than the last, and we just pick the most expensive one for no reason, okay? When there's literally nothing different. Here, in this case, it's like walking in and seeing one item of low quality for an expensive price versus a high quality item for a very low price. Which one would you take? It's a no-brainer, right? You take the high quality item that comes with a low price. You always want the best deal, okay? And these types of trades are like the best deal in the market, all right? Not only that, they're the less risky ones. And I'll sort of explain that to you here in a moment, but here's the idea, okay? I've drawn out these charts. We're looking at a monthly candle, okay? Then we broke this down into 4 weeks of the month, okay? And you can see one thing I'm trying to point out to you is that there's only 4 places on this entire chart circled. So over the month, there might only be 4 trades, okay? And there might be weeks where we only take one trade. There might be weeks where we take no trades. You understand what I'm saying? So it's not necessarily important where I circled these charts at, but also at the same time it is. There's reasons why I circled the charts where I circled them, okay? For example, maybe we have a situation like this where this market has closed bullish week one, okay, and then puts in this high, consolidates, and breaks down, we get this little consolidation right here, and then we start making lows or lower highs going into our session. This might be a trade, a low-hanging fruit trade that we take advantage of on week 2. All right. This trade, this shorting opportunity here is because we have the high of week 1, the high of week 2 so far. We trade back into, at the end of the week, beginning of a new week, we trade back into those levels and then get our reversal patterns in the sessions we're trading. Again, the low-hanging fruit trade, and these might not be in the session that you're trading. Okay, so even though this one occurs here, we might have to just scratch those out because they don't happen in the New York session. You see what I'm saying? This one here, we have week 3, that here's the high, here's the low, but we put in this peak formation right here. We trade back into that and then give a reversal signal or whatever, right? And we take that trade. These might be trades I'm interested in taking, right? But the fact is, we don't want to take trades every single day or even every single week. There just might not be opportunities there. Here we're looking at another example of a month, right? We have a month that closes down. Here's a month that closes up. And I might be interested in taking a trade like this, right? Where the market has broken the low of the day right before the session. We have a high in place in London. New York comes back into that London high and then starts to trade lower. We might get into a trade like this, right? We can see that we have an inside day on Tuesday. So on Wednesday, we might be looking for a trade. We have this nice consolidation at the end of Tuesday going into Monday. This spike down into the lows, right? We put in our W formation. We have our engulfment, our pin bar entry going into 930 right here, and we take this from the low of the day, basically low of the week level to high of the week level. Okay, maybe this is our first green day, signal day, so the next day, but this happens in maybe in a different session in London or something like that. We can't get in on that, so maybe we only got 2 trades out of this entire month, right? Something like that. Here's on the week. I'm just trying to show you what these would look like. Here's the low from Monday, Tuesday. We get an easy trade on Wednesday that trades back into that level in London. And then we have a nice W going into 930 for the continuation higher on Wednesday. Sort of the same scenario the next day, right? Something like this. A couple trades, only a couple times a week, and this might be it for the rest of the time because these are obvious trades. This is what it might look like on the day if we're trading something, we're following something like the US 30 or whatever. But if we have a well-engineered chart, this is the type of thing we want to see. We have a high and a low in place from London, right? The London New York gap time right here. We have this low and this high. Here's our 930 New York Stock Exchange open. Right before 930, we've come back down into the London low, right? And then started to trade higher. We have our engulfment pin bar entry right at 930, a W that is coming to completion right at 930. We can get in on something like that, right? And if you're not seeing the W going into 930, we might want to wait and see if it's happening by 945. Here's a different type of scenario where we've been grinding higher. We have a high and low from Asia, high and low from London. We have marked those off before our session. When we come to the session, we've broken out just before. We've broken out of the London high and then going right into 930, or maybe this is 945, maybe even 10 o'clock. Okay, we're back up into that high. We put in our M formation and start to trade lower. We might not get in right here at the top. We might get in on this pullback, but this is how these trades end up looking on the day. They're very easy to recognize with a little bit of experience and just marking off these levels every single day and watching what happens. Not trading every single day, but just watching what happens, right? So I hope that makes a little bit of sense. I know it's kind of hard to look at charts that people have drawn, but sometimes I feel like it's better that way, right? And you can just sit there and draw charts if you haven't been doing that already. Just draw your own charts. I used to draw my like P&L charts. The if it was going up or going down that day or that week, you know what I mean? I would practice drawing different time frames, but just get used to seeing things like this and noticing things like this at certain levels up here, right? Going into your session, you know what I mean? That type of placement. That's the type of thing that you'll be looking for. Something like this, or this actually, something like this. But right at the high of the month, going into the, or the high of the week, going back into a previous high of the week at the high of the month, right? And inside of this wick, that's where we're trying to be trading. So I hope that that makes sense, man. But anyway, until next time, I hope you continue to free your mind.